Okay, so after 2 weeks, we finally got a green one. MBS ended up 4 basis points. The 10-year dropped 2 ticks. Now, 4 basis points isn't a huge win, but breaking a 2-week losing streak matters psychologically. And getting there was wild. Blockade, bombshells, oil spikes, midweek recovery, Friday fade. Let me walk you through it all. Here's the scoreboard. MBS up 4 bips for the week, 10-year Treasury down 2 ticks. Net positive on both, just barely. And the daily story? Monday, down 46 basis points on a blockade announcement. Tuesday and Wednesday, strong recovery on CPI and PPI wins. Wednesday alone gained 28, Thursday down 11, but we were down 26 intraday before recovering. Friday down 7 more. Volatility all week, and oil up 9.5% on Monday alone, biggest single day in about 2.5 months. So what's the real story? Let me connect the dots. For the past few weeks, we've been talking about the Warsh Effect, the Fed transition creating some uncertainty. That was the main narrative. This week, their narrative got replaced by something bigger, geopolitics. Monday's move set the tone. Over the weekend, we got 2 major announcements, a straight blockade and a 20% proposed tariff proposal on the Strait. Oil jumped 9.5%. MBS lost 46 basis points alone on that day. The market wasn't waiting for a Fed statement or an economic report. It was reacting to news headlines out of Washington and the Middle East. Then, Tuesday and Wednesday, we got a genuine reprieve. Core CPI came in favorable, PPI followed with another win, MBS rallied hard, but by Thursday and Friday, we started giving some of those gains back. Not because of data, but because oil kept climbing on the flight to safety. Retail sales came in at consensus, and MBS still sold off on the news. That tells you the sentiment is fragile. Here's the meta shift you should notice. Under normal circumstances, MBS trades on rates, inflation, and Fed expectations. This week, we traded a lot on oil. That could be a fundamental change in what's driving your mortgage rate, and it's not going away as long as Middle East tensions stay elevated. A couple things to watch next week. First, does the ceasefire show any real progress, or is it totally done? If tensions ease, oil comes down, and mortgage-backed securities might get a tailwind and improve. If tensions escalate further, we could see another Monday or Thursday, Friday losses for mortgage-backed securities, as next week's economic calendar is pretty light with bond auctions. Geopolitics should take center stage this next week. That's the week. Chaotic on the daily charts, but net positive for the first time in 3 weeks. Small win, but we'll take it. If you want to talk through what all this volatility means for your mortgage situation, head to johncobainhomeloans.com. And on Wednesday, I've got a video coming out on FHA loans explained and why they may make some more sense than conventional in certain situations. Might change how you think about your loan options. I'm John Cobain, NMLS 374881, Edge Home Finance. Have a great rest of your weekend.